Welcome to MDV, The Blueprint. I am your host, Michael Della Vella. Today, we're going to dive into a fascinating corner of the investment world that most people have heard of, but few actually understand. The tax lien and tax sale investing industry. My guest today is someone who has been at the forefront of this transformation. Brian Seidensticker. Brian is the founding partner at Last Best Partners. He's also the founder and CEO of Tax Sale Resources, the leading data and technology platform for the tax sale investing industry. In this episode, we will unpack what tax lien investing really is. Whether you're a real estate investor, fund manager, or just curious about how the hidden markets work, this conversation will give you a completely new perspective on an overlooked asset class. Brian also runs his own podcast, Tax Sale Resources.
Where in Cleveland are you?
I am in Westlake, the west side of Cleveland.
Okay. Well, I guess I'm a little ways from you. My two kids were born up there at the St. John's Hospital, but we live down in the Bath area, like Fairlawn.
That's gorgeous.
Love it
Beautiful
down there.
out there.
I love it, yeah. Well, nice to meet you.
Nice to meet you. And Brian, we really appreciate you coming on. I think this is going to be a very interesting conversation. I am aware of tax lien investing, but by no means do I feel like I know. I couldn't educate or tell people more than, yeah, I know what it is. So I can't wait to hear about this. And why don't we start off? Why don't you give me Brian Seidensticker backstory, where you started out and how you got where you are today, and then we'll dive into some questions.
Sure. Yeah, I guess from a formal getting started, or just a high level. And
no, let's talk about I think I read somewhere that you were an aeronautical engineering in college.
Yeah, I went to Arizona State and I guess started my career in the aerospace industry. And now I call it my previous life, but that's where I spent roughly the first 10 years of my career, and really ended up loving what I did, at least for the most part. It was one of those. I was actually still in school and had my first internship. It was a design internship, and had a bit of an epiphany. I call it my early 20s crisis, where I had a realization that maybe engineering isn't what I thought it was going to be. I thought it was going to be a lot more hands-on stuff, and turned out it was a whole lot more, sitting in front of a computer. Anyway, I think what I had envisioned, from a fairy tale standpoint, was much more what I think, the mechanics of the vehicles and the guys actually doing the work, and that's not necessarily the folks that are doing the design engineering in reality. But anyway, lo and behold, I was late enough in my schooling that decided to press on and ended up being a systems engineer for a company that worked on missile defense projects, and did some pretty cool stuff, and really had no idea what tax liens were at the time. I had, as a result of that early 20s crisis, kind of said, hey, maybe there's something else that I should try. And that other thing that I decided to try was fix and flipping properties in Montana. This is the 2008-ish time frame, and ended up upside down on one. I guess a lot of people did. Lucky for me, it wasn't necessarily detrimental, but I did, as part of that process, end up getting a notice about a pending tax lien being placed on that property. And one of the unique thing about Montana is that I didn't just get one notice from the county like most states. Every potential investor has to send a certified letter. So I got dozens of certified letters in the mail, with varying language, but they all kind of said, hey, we're looking at purchasing the tax lien on this property, right? And if you don't do anything about it, you could end up losing, ownership of the property. And that was an eye opener from a lot of perspectives. Now, as a from the property standpoint, paid the taxes, before it ever went to sale, never had that issue. But it definitely, got me looking into or investigating what the heck these notices were all about. I guess being an engineer, I'm curious by nature, and after doing a bunch of research, realized there's a pretty sizable space out there, right, on the order of billions of dollars. I didn't know exactly how big, and that today I can tell you, there's about $4.5 to $5 billion of tax liens sold annually because we track that. But at the time, I just knew it was big. There were some big banks doing it, and maybe that's something that I should get into, knowing that, okay, well, if these guys are benefiting from this downturn in real estate, is that something that I might be able to jump on board? So anyway, that's a long story of how I got introduced to the space. And then I guess the second half of that story is I went on vacation. This is a couple years later. I didn't just drop my engineering and start flipping houses right away, but I went on vacation for 6 weeks. And I was very nervous before I left because I thought, I'm going to come back to an ungodly amount of work and catch up, right? But felt, the vacation was going to be worth it. Ended up coming back, and it was almost like I had never left. And it was my second epiphany of realizing maybe I'm a hamster on a wheel. And so between, not quite getting out what I was looking for in the engineering and this, feeling like I was a hamster on the wheel is really what made me take the leap and say, hey, I'm gonna actually make a plan toward finding something else, and that something else ended up being what is now Tax Sale Resources.
At this point, I'm assuming from what my research, you came up with this software that basically, please excuse me, you are taking all the data of tax liens across the country, or are you specifically to a state and county that this software is working?
No, we at this point we monitor the whole country, so we track about 8,000 to 9,000 auctions annually. Ends up being between 1.5 and 2 million properties, and between both tax liens and tax deeds, we actually monitor both types of auctions. Ends up being about $8 to $9 billion of transactions on an annual basis that we're tracking through the software.
But are you a solo investor at this point, or have you?
No, at this point, no. I guess I'm majority owner of the partnership called Last Best Partners, which owns both Tax Sale Resources, and we have a fund now that actually is a capital partner for tax deed investors called Mount North Capital. But it has gone through many iterations of evolution since the very first I'll say software, which is really just a tool that we were using internally. So I guess taking a step back, when I did finally say, hey, let's see if we can buy some tax liens, I say raised I'll say a fund, but it was really just some family friends' money, and we started buying tax liens on a small scale in Montana and Wyoming. And I was in Arizona where I was living. My employee number one and still with us today was my sister, Rachel, and we just needed a way of communicating this information that we're gathering back and forth. So as an engineer, I built a simple website, really just for her to be able to put in information, for me to be able to see it, right, and not have to email these spreadsheets back and forth. And I was showing that to a gentleman at a conference, and it was really he that had recommended, if you make that available to the public, because I don't think anything like that existed, which he was right, and that's actually why we started building it. You might actually be able to offset some of your overhead by subscription revenue from that. And so I set up, initially it was taxliendatabase.com is the really original URL domain that I picked out. And then within a couple of years, ended up becoming taxsaleresources.com, and now we track. Think of it as like a Zillow for those that are listening. Think of it as a Zillow specifically for tax sale properties, so tax lien sales and tax deed properties. So if you're wanting to go on to a platform and visually see where they're located, visually understand all of the attributes of the properties to make those investing decisions, that is what the platform does today.
But it's not like a Zillow that anyone can go on. It's a subscription you pay to get on it, correctly?
Correct. Yeah. I'd say the monetization of it is different than Zillow. Zillow is a very different, public, model. We're much more of a, hey, it's not for everybody. There's a subscription, level of access, and then you're able to use the platform to do your underwriting and decide what you want to buy or what you shouldn't buy, based on the information that's provided.
In the simplest terms, can you just, this is what tax lien investing looks like. This is what you do.
Well, I'll try to make it short, but you'll learn if you haven't already. I'm not the best at short answers, but I think it helps to understand the full picture of what the heck I'm talking about when I say tax lien versus tax deed. And it really starts with a point on where most people don't even think about, right? What happens if you don't pay your property taxes, right? And so what the journey really starts at that point, because most people do pay their property taxes. But what happens if you don't? And it's a mechanism that was invented a long time ago. The advent of enforcement of the property taxes, and really with the county, typically the county, in some states it's actually at the city level, municipal level. They're looking to balance their budget, right? They anticipate receiving X dollars, in revenue, so that they can pay teachers and pay, policemen and firemen and pave the roads and all that stuff. And if one person doesn't pay their property taxes, it doesn't really break the bank. But one of the largest sales, or the two largest sales in the country, would be Cook County, which is Chicago, Illinois, and there's New York City, and those two are several hundred millions of dollars that end up going delinquent. And so what the county does is say, hey, I'd like to balance my budget, and so they make a deal with a third-party investor, right? And that's the tax lien side of what I'm talking about. So what the county says, right, and this is done on a massive scale, right? It's not an individual negotiation, but the county says, hey, investor, if you're able to pay those property taxes to me like I'm owed, then when the property owner does pay their property taxes, and the vast majority do, then whatever the penalty and interest that it was collected for paying them late, I will hand them over to you as the investor, right? And so the county, it's kind of a win-win for, well, I'd say for all three parties, right? The property owner is given more time to pay their property taxes, right? On some cases, 3 to 5 years to pay their property taxes.
But it's based on that county's rules.
State rules, typically.
State rules.
Yeah, but there's some county fees.
And each state may differ. It could go from 1 year to, you said, 5.
Correct. Okay. Yeah. Each state
so
has
the investor cannot speed up that process. They have to abide by that.
They do.
Okay.
They do. There's some nuance to that. Like some states will allow investors to notify, property owners or spend extra effort trying to find. A lot of these properties are abandoned, right? They're not the homes that you and I are living in. They're, typically people pay their property taxes. So the deal that is struck between the county and the investor is, hey, balance my budget, pay the amount of taxes that we originally owed, and then when the property taxes are paid, then I'll hand over that excess amount to you as an investor. But like you said, the investor can't accelerate that in most cases, and they don't know exactly when they're going to be paid. It could be the next day, it could be years down the road, right? And that's kind of a hard thing of the investor side. But the investor could stand to make a pretty decent return, right? And that, I'd say on average nationwide today is somewhere in the 7-8%. It can be as high as 20%, right, in some areas. And if you don't know what you're doing, you can earn 0, right? And so it just depends on how well you know what you're doing, where to buy, and so forth. And anyway, that's the tax lien side of it. Now, most people then have the question of, well, what happens if the property owner never pays their property taxes? And so the second half of the story is the investor, right, that paid off those taxes gets a lien, right, just like a micro mortgage. I think most people are familiar with how a mortgage works. If you don't pay your mortgage payment, the mortgage company can foreclose on your property, and that's exactly what happens with tax lien. So if you never pay the property taxes, then the lien holder, the tax lien investor, gets to or can enforce, through a judicial action or some sort of action that forces the foreclosure of the property and the sale of the property, and then the proceeds from that sale go to the lien holder to pay that amount, right? And the excess proceeds from that, following a recent Supreme Court case, are now made available to the previous property owner. Now, that second sale I talked about, selling the property, that is a tax deed, right, auction. So you're no longer a lien holder, right, or the investors in those auctions aren't just lien holders. They don't just have an interest in the property. They're buying the property, right, as a real estate investor, like any other real estate. Comes with some nuances, but that's the journey of really what tax sales are all about, Michael.
Okay, I get that. What was really big when I was in my 20s is I haven't heard about this until I started researching you, but in my 20s, and I dabbled in this, was bank-owned properties. And we would go to a sheriff's sale, and you had to have a bank check for $10,000 at the time, and we would sit in a room and we would bid on foreclosed homes. Is this auction, is it similar, or is it all bidding online that you're doing the tax lien?
So the liens are, I would say, one benefit, right, depending on whose opinion, right. One benefit of COVID is that prior to COVID, less than 5% of auctions were online. Today, 70-80% of the auctions are online, and the way they're executed are a little different, right. Electronically, you can kind of picture yourself sitting in a room, like raising a paddle, but you're not, like on the tax deed side, they follow that picture exactly, right? You're sitting in a room, one person bids $5,000, another person bids $20,000, right? You're bidding on up to whatever dollar amount somebody's willing to buy the property for. That's the tax deed side. The lien side is kind of weird. It's a little opposite. And auctions vary, but the two most common, one is what we call bid down, and so you're raising your paddle, but you're raising it, lowering the interest rate you're willing to take, right? So it starts out, I use Florida, right? And again, every state's different, but Florida starts out at 18, right? First person bid gets 18% on whatever, the amount that they pay. The next person says, I'll take 17 and a half, and 17, 16, 15, right? On down to, at some point, somebody goes, is this really worth bidding lower, making 0.25%, right? And some stuff in Florida sells at 0.25%, and it happens, right? Now, the odd thing is that it happens because in Florida, right, and this is also varies by state, Florida has what's called a penalty on top of that. You get a 5% penalty no matter what rate you buy the lien at, and so you might bid it down to 0.25%, but you get a 5% penalty. So if somebody comes in and redeems it the next day, you get that 5%. So it's kind of a low annual return, right? But if you take that 1 day interest at 5%, multiply it by 365 days, that could be an amazing return, right? But repeating that every day for 365 days is not going to happen. But the auctions are held online, right? In a feeling that's similar to buying properties online, but the auction process itself is a little different, bidding down.
Gotcha. Understand. It makes sense. So whoever's willing to take it at the lowest thing is probably going to win the bid.
Right.
So I'm going to use an example. I'm at the bid. I can buy a house or get one of these tax liens anywhere in the country if I'm going online. Is that correct? I don't necessarily have to be in Ohio. I can get that in Montana. I can go to Florida. Correct?
Yeah, well, yes, with exceptions. I mean, there's not every auction and not every county holds them online. I think only one county in the whole state of Georgia has theirs online. The vast majority of Texas is still live, but you can attend all but maybe one or two auctions in Florida are online. A lot of other states are online. Since you and I are both here in Ohio, Ohio has a very different rule set where most of the counties hold what's called an RFP process, and so bidders aren't bidding down on individual liens. Very large investors are coming in and buying the whole portfolio, and the bidding process is more of a mail-in hey, I would buy your whole portfolio of liens, right? There might be 10 million in delinquencies. I'll buy them for 9.5 million. I don't know. That's just a random example. But I think the key there is that each state's process is slightly different. Now, if you're wanting to buy liens online, there is a ton of auctions that are held online today, and so you can certainly participate in those auctions occur throughout the year, right? So it's not like you can go to and buy a lien in Ohio or let's say Florida at any time, right? They have all of their auctions in May and June, and so you won't find any liens for sale in Florida outside of those two months. And every state's slightly different. Iowa has all of their sales on one day. So you kind of have to be, active on the particular time of year when that area you're looking to invest is active. Unless you're willing to go anywhere, then there's always a sale going on somewhere.
So did these auctions go on monthly, or is it just a yearly or weekly?
It does vary, right? So, Texas and Georgia is the first Tuesday of every month, and they have sales all the time. Florida, they have every county has their sales within those 2 months, May and June. And most of them happen in a couple week period. There's some states that have their sales randomly throughout the year, right? New Jersey has sales at any time throughout the year. Most jurisdictions, as we call them, whether it's county or the city, will have one, maybe two sales a year, right? So if you're very specific to a county, you might only have an opportunity once, but if you're open to anywhere in that state, then you will have more opportunities throughout the year.
I'm sure you've seen this as I'm learning about this. If you go on social media, this is a get rich quick scheme, and it's simple. And why isn't everyone doing that? And I'll teach you how to do this. You are not a teacher. You provide what these other people don't know. Am I correct? You're getting the information that makes you make a good educated choice in what to purchase and what not to purchase. But I have to believe that all these properties, all these liens, it's sight unseen. I mean, maybe you could do a drive-by if you're in the area, I'm sure, but majority's got to be buying this sight unseen.
Yes, you're correct in that we are not an educator. We're not a coach, right? We have a lot of great, free information. You just go to the website and we have resources, and I interview attorneys in the space and professionals on how one state works versus the next. Doesn't cost anything, but we're not a coach or can help people get educated, right? Beyond the free information. We like to say once you know what you're doing, then we're all of the tools that you need to be successful, starting with figuring out which liens are worth buying, which ones are not, right? In theory, the process isn't that complicated. I mean, I explained it, I guess, and I took the long explanation, but it took me 5 minutes to explain the process. It's not that complicated, right? And you don't need a license. You don't need to go through a bunch of education in order to invest in this. So from that perspective, it's easy, but there's certainly many, many, many ways you can buy, something and not make any money or lose all of your income. And as far as a get rich quick scheme, I guess in theory, all of those scenarios aren't impossible, but it's highly, 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 highly unlikely that ever happens, to most people. But it can be a decent investment if you know what you're doing. So I don't know if that helps.
Absolutely. Are you still buying liens, or are you still now just not doing that and just running your company? And with the fund, in a sense, I would assume that you are a partner with whoever you're partnering with.
So we got out of, I'd say, the direct buying of liens in 2012, 2013.
Wow.
And then really didn't do any buying directly until we started Mountain Earth Capital in 2020. Initially was Fund 1. And now I guess we are, right? I need to, divulge we work with partners, local partners that have a successful model. Most folks and it's really just tax deed investors that we work with. We don't do much in the lien side of the business, but we do get involved with partners that are focused on the real estate side of the business, and we partner with them and acquire a fairly significant amount of tax deeds. We're certainly not a multi-billion-dollar fund. I think we're at about $40 million in total assets that we've purchased over the last couple of years on the real estate side, and so from that perspective, yes, we do buy. It's just not necessarily for our own personal gain. It's for a shared gain and in a partnership with somebody else that's executing a successful model.
So if I hear what you're saying, the getting the deed is where really more money can be made in this situation, because you're buying a home way undervalued, pennies on the dollars. Are they fixing these homes up and flipping them, using them as rentals?
Both, right? I think, and you're exactly right. There's two different types of investors in the space. The I'll say paper investors of much more passive, right? Want to collect an interest, lower risk in general. That's the lien side, right? Buy liens, right? If you're wanting the higher potential return, there's higher risk, much more hands-on, right, than the tax deed side, where you're buying the real estate. The returns can be significantly higher. That's correct. Now, as far as the deals you're getting, again, like most areas, you can buy properties for pennies on the dollar, but they're probably going to be properties in areas where it's very hard to sell that property, right? What comes to mind is like middle of Arkansas. You can buy, lots, right? Vacant lots, decent, location for a couple $100, right? In most areas, that'd be tens of thousands of dollars. So that option exists, right? But are you going to be able to turn around and sell that lot, for tens of thousands of dollars? Yeah, hard, maybe. You might have to sit on it for several years. There's just not the demand for those vacant lots in the middle of Arkansas like there would be in like South Florida, right? Now in South Florida, right, Miami-Dade area, good luck getting anything less than 95% of value just because the demand is so high in that market. But there are certainly pockets out there, and one thing that we do provide as the partner in those partnerships is we do know where those pockets are and can kind of guide folks in the direction of finding areas where those deals are do still exist. They're not going to be $1,000 property for or $100,000 property for $100, right? Those don't exist, right? But the $100,000 property for $50,000, right? That certainly exists in some areas, and that's what we focus in.
So when people that partner with you and are part of your program, do you feel like they have a leg up that if there's 100 homes that have tax liens and their tax deeds coming up, do they have a leg up because of the information you provide them that this is out of 100, I only want one. This is the one home that I'm going to make a fortune on, and pass everything else up. Where is that the leg up you give people? Here's where the data is. Here's where is the lowest you should bid if it's a reverse bid. Is that what you're providing to people?
Yes, I mean obviously I'm biased, right? I guess it's our program, but we certainly feel very strongly that the information that we provide through the software, which is analytics, right, helps guide people in the right direction. Not only where those pockets where you can get good properties, but we like to use the comparison of typically, right, if you have no help, right, and you're just blindly underwriting properties, and you want to get it at 50% of value, you're probably going to underwrite about 1,000 properties before you buy one and have success. Is it possible? Yes. A lot of work, absolutely. Can it be done without analytics? Sure. With the analytics, we like to tell folks it's really more like 1 out of 15, 1 out of 20, because we can tell you which ones are much more likely to get to auction, what their likely sale price is, and you're not going to be 100% accurate on every property, but if you average it out over 15 to 20 properties, you will likely buy one of those 15 to 20 that we point people in the right direction to. So from that perspective, yes, it can be a huge benefit working together so that we can help guide folks in the right direction.
I want to go back to your example when you were flipping houses and you started getting all these notices. Mm-hmm. Were you getting notices because people were thinking of buying the lien, or did multiple people own the liens to this property? That was where I was confused.
Yeah, so Montana statutes are weird where every potential investor, so to have the right to buy the lien at the auction, you have to send a certified letter. So what I was receiving in Montana was everybody that was going to potentially buy the lien on the property. In reality, I'm not aware of any state where a lien is actually held by multiple parties. I'm always nervous about saying that doesn't happen. I'm not aware, and I've been in the space for a long time, talked to a lot of people, I'm not aware of that ever being a thing. Now, there could be states where one investor owns a lien from 1 year, right, and another investor owns a lien from a different year, but there's not going to be multiple people owning, the same lien on the same year. There shouldn't, because that becomes a bit of an enforcement nightmare.
Has this become really big with, let's just say, Wall Street and hedge funds? Is this a big business with them now?
I think the general answer would be no, because when you're talking about dollars for Wall Street, right, $4 or $5 to $10 billion is drops in a bucket for them, right? And so, is there significant capital? And you can, if you have a fund and you end up buying up to $100 million, you can securitize it, right, through a process and make it into a Wall Street investment. But it's not something that Wall Street is jumping all over, right, and trying to get into because there's just not the volume there for them to
Gotcha.
see. I mean, they're on the order of trillions and trillions of dollars, right, and we're talking $5 to $10 billion, and so
Gotcha.
it's big, right, when you compare it to most real estate investors, but it's not big compared to a lot of Wall Street.
Do you have a lot of competition, Brian, that people have? If you were first to market, are there people now that are trying to do what you do and copy off what your success?
Well, I mean, there's a couple of platforms out there that are I say trying, not necessarily on a nationwide level, I don't believe, but they certainly are within multiple states and doing a portion of what we're doing. To my knowledge, we're the only ones that have actually paired both the technology and the capital side of like providing a solution, for investors that want to do this full time. I'm not aware of folks that are doing it from that perspective. That doesn't mean it doesn't exist or that people aren't planning on it. It just hasn't happened yet.
Gotcha. So this next question I have, perception to me, that tax lien investing and tax deed investing, it's profiting off the misfortune of others. It's taking advantage of a distressed homeowner. And then I also can see the side that you would say, well, it's vital to the economy of a county in the state that if they don't do this, that schools could have cuts, police could have cuts, roads may not get done. Am I on the right path there?
No, I think you're exactly on the right path. And the whole reason I decided to kind of go on a tour, podcast tour, if you want to call it that, it really is to help. I don't know if fight's the right word, but to spread more accurate information about the space. Right? It does have this connotation of taking advantage of distressed owners, and I'm certainly there's scenarios where that does happen. Similar to like a mortgage, foreclosure sales, from that perspective. The reality is the vast majority of tax liens and deeds, A, they get paid, and B, those that don't get paid and end up in some sort of foreclosure were like legitimately abandoned. They're the worst houses on the street. And so what I typically try to provide is like a real instances where the properties that are purchased at these auctions are I'll say crack houses right on the corner that the whole neighborhood,
Wants them
would
to
love
come
to
down.
see go away, right? And so the investors that are buying those at the auctions and doing the fix, and flip of that asset, you typically turn it into one of the nicer houses in the neighborhood. And I've never heard somebody doing that, right? And then the neighbors coming over and hating them because they changed that crack house into the nice property. The neighbors love it, right? And the community is improving because of that. Now, there's certainly the potential, right, scenario of somebody in hardship that ends up maybe losing a house over that scenario. But it's the typical, like 99.9% of people and investors are not targeting those, and the 0.1% where that happens, that's the 0.1% that ends up making it in the news. But you can't ignore the 99.9% that are legitimately improving the community, from helping balance the budget to make sure teachers are paid, right? Policemen are paid, right? And then taking those houses that the blight in some areas, right? Go back 15 years in Detroit, right? They had 200,000 abandoned I think it was almost 200,000 abandoned single-family homes in Detroit, right? So without the investors that would come in and say, hey, I'm going to actually spend the money to purchase those houses, turn them into livable space, right, and revive Detroit, right? I don't think you would have the revival of Detroit like you've seen. I don't know if you've been to Detroit lately, but it's pretty amazing the turnaround that has happened in Detroit and in the areas where this has been a thing, right? I think no one likes to look at doing the dirty work, right, of actually going in, but what other options do you have? Just let the property sit and rot? So that's one perspective. And the other one is, if there is no mechanism of enforcing the payment of property taxes, why would anybody pay property taxes? It's funny because there's a couple of states that are enacting legislation to eliminate tax sales, and to me, right, I guess I'm aware of the space, but if I knew that there was no way of enforcing the payment of property taxes, why would I ever pay them, right? I guess I would, right? Just because I know where it goes to. But there's going to be a lot of people out there that just decide to not pay them because they know they won't lose anything from it, and that's unfortunate. So that's the other side of the perspective, at least from somebody that's in the space, Michael.
Brian, has there ever been any situations where somebody with a beautiful big house on a lake somewhere or mountain backgrounds that this goes through, that somebody bought a lien, and or is it never a situation like that?
But lien side, right? It's interesting. Yes, there are liens that are sold on very nice properties in Florida every year, and there's some theories that there's folks that own those houses that know exactly what they're doing, because at the end of the day, they know somebody's going to bid it down to 0.25%, right? They might have to pay that 5% penalty, but they can wait 2 years to pay that 5% penalty. And where else can you get a $50,000 loan for 2.5% right now? So they know how to game the system, right? And so yes,
so that does go on. Wow.
Oh yeah, and it's a significant amount of them, right? Multi-million-dollar mansions in Florida that they go delinquent on taxes every year, and they pay their property taxes on the last day before a tax deed application can be filed, right? And so it happens, right? Is everybody doing it in Florida? No. Do those houses end up in tax deed auctions? We have never purchased. The only thing I can say is from Mountain Earth Capital's perspective, we've underwritten properties in I'll say hopes that maybe they get there for whatever reason, but they always redeem prior to the auction, because who's going to lose a multi-million-dollar property for even $20,000 of back taxes, right? There's other ways of generating the money needed to pay those taxes, and it could be selling the property right before the auction ever take places. So that is what typically happens is the property, if the owner is in that level of distress, they will find a way of liquidating that asset in some of their means, right? Way before it ever gets to the tax sale.
Is there a state that has more of this going on than another?
Well, the state with the highest volume of auctions on an annual basis is Florida, right? Because I think in part of it due to a lot of savvy, folks that understand, hey, I can not pay my property taxes, and I can have a very minimal penalty over a couple of right? And then I don't know the other economics going on necessarily in Florida, but it's $750 million a year in delinquencies on an annual basis, and that's quite a bit more than the next largest state. It's about, that Florida alone is about a fifth, right, to a sixth of the entire nationwide volume annually.
I've heard horror stories that people that do this, that are in the I can do this. I watched a YouTube video on it. That they don't know what they're doing. They go into these auctions, and then they're buying. I think there was a story nationally that somebody bought a mailbox. I can't remember where. I don't know if it was on Today's Show. But it was. Is that you've heard that?
Oh yeah. I remember that story a few years ago, and it was in Florida, right? And the reality is the investor tried to blame it on the city, right, or the county. They sold me fraudulent lien, and the reality is the county does not. I mean, there's disclaimer after disclaimer of you have to do your own due diligence, and when you look at a parcel map of a county, there are always weird parcels that end up like a strip of sidewalk, a mailbox, right, or a landlocked, 50 by 50 chunk of property in the middle of a swamp. I guess maybe I stare at it too much, but you see those all the time. The county is not necessarily selling them to you, like, hey, you need to buy this, right? That's not their job. All they do is say, hey, here's all of the parcels with delinquent taxes on them, right? Anybody that wants to buy them, go for it. And there certainly are models out there where one man's trash is another man's treasure. One group wouldn't touch that parcel with a 10-foot pole. Another group sees that as a giant opportunity. But there are legitimate parcels that have no value, right? What are you going to do with owning a mailbox? How can you enforce that? But it's 100% on the investor, right, to do their due diligence. That was really how Taxable Resources, why we were initially built, is to provide all that information, right? It's easy to make that I shouldn't buy that decision when you see the parcel boundary and it literally is outlining a mailbox. That's probably not one you should buy. Or you see parcel boundaries where it's half of a garage. We've seen that. Or it's a back 10-foot strip of a property. What are you going to do with that? And so those are, if you do your simple research, eliminate those, right? But because it is not, the industry does not require somebody to be licensed. You don't have to go through any sort of certification. Anybody with money can jump on these auctions and buy them. You end up with uneducated investors buying bad liens, right, and losing money from it. And in my opinion, again, I'm biased, but that's not the county's fault. It's nobody's fault except for the investor that didn't do their research.
Awesome. So Brian, I'm going to give you the example that I want to get into this. How should I start out? What's the first thing I should do? Do you have a book I should read? Should I just go straight to your video and sign up, or what's the best advice you can give a young person that wants to do this?
I'd say the first thing is I do have a podcast called Tax Sale Insiders, and I've interviewed a ton of attorneys and professionals in the space. It doesn't cost anything; it just takes time, right? Listening to these, and it's pretty dry content. I jokingly tell folks, put it on before bed; it'll help you go to sleep, because you're talking about the tax sale process, and it can be an hour long podcast, specific to just Louisiana, for example. But if you want to get started, start there, right? And I think by the end of a few episodes, you'll be enabled with enough knowledge to say, hey, not all the coaches are bad, right? I think there's some really great coaches and educators, and actually National Taxing Association, which is the only nonprofit in the space, has a course you can go through, and it's very high level, right? I'd recommend going through that. And before you ever spend a dime actually buying, I definitely recommend speaking to an attorney that is familiar with the tax sales in the states that you're looking to buy, so that they can tell you all of the ways that you can lose your shirt before you actually go do so. So that's, I'm not, I guess again, I'm not the educator. I'm not trying to, necessarily sell a product. I just want people to go about it in the right way if it's something that they're legitimately looking to do, right? And the first thing to do is go educate yourself better before you get started.
What is the best thing you provide for your investors?
Get kind of back to once you know what you're doing, once you get yourself educated and you know which ones to buy, which ones not to, then we can be your best friend for investors that are specific to the tax deed space, because not only are we going to help point you in the direction of which ones to buy, but we're going to be able to provide the capital for you to do that. And that's,
so you have to have a track record. You have to have been it. You're not going to just let anybody join you and say, I've never done this before, but I'd like to buy 100 this year.
You can certainly, subscribe to Tax Resources, use the platform, but as far as like being a partner in the larger program, yes, you do need to have a track record, right, of successful performance. And then most people that have gotten to that stage, there's a big gap because there's not a whole lot of banks. There's no banks, to our knowledge, that are lending in that space, and it's very cash intensive. You can't get any sort of loans. And so most people get to that stage, are like, great, I got a model. Now what? Right? I don't have $5 million to scale. How do I do that? And that's exactly where we come in and say, hey, we'd love to enable those folks to scale.
Is this hard money lending?
We're not actually a lender. It's a partnership, right?
It's a partnership. Okay.
It's a partnership, right?
Wow.
Profit share. So we're definitely very much on the same team as far as making sure people are buying, right? Because we don't make anything unless they make something.
You want their success to happen for you to have success.
Exactly.
Okay, so let's talk about, because my phone is going to blow up. I am going to have tons of people when this drops calling me, and I know I'm not an expert on it. How do we get a hold of you, Brian? What's the best thing for us, our listeners, to do?
The easiest way to get a hold of me is go to taxsaleresources.com, and there's you can send an email to our customer service, or there's a phone number on there. Give us a call. We actually have real people on the other end answering. We don't use an AI agent or anything like that, and just say, hey, I was on Michael's podcast. I heard Brian speak. I'd like to connect with him on whatever, right? And my team will get you in touch with me from there.
Do you miss at all being a rocket scientist at all?
I do on occasions. I don't know if it's the rocket science component. I still love the industry. I'm a maybe not agree with all of his political insights, but I'm a huge SpaceX fan and what they're trying to do there. And my wife, gives me a hard time because I nerd out on watching the launches and all the explosions and all the fun associated with that. I don't necessarily wish I could go back and redo it any differently. I think the only thing that my wife and I talk about, she's an entrepreneur as well, but is when you leave the corporate world and go into business as your own and as an entrepreneur, you also give up any aspect of a legitimate vacation where you can truly unplug and ignore your email and communication for any period of time. But beyond that, no. I mean, I couldn't be happier with how things have gone and where we're at today.
Did your background in education help you completely develop this? So everything you learned just helped you develop the way that investors are doing this? This was your baby. You didn't hire developers to do this. You did this?
Well, at this point, we have a development team. I mean, the initial iterations were something that I built, but it is certainly not a Brian thing today. I have an amazing team.
Gotcha.
I got amazing developers that have taken what initially was a concept, right, and I'd say version 1, and now we're on version 20, and we blew way past Brian's capabilities, 15 versions ago type of scenario.
Understand. What's next for you? Because you seem like the type that this is only going to be so long, and you're on to the next thing.
I don't know. I mean, I think for now we have a lot of room for growth in our partnership model that we're working, and that's certainly the priority that we are pursuing at the moment. I guess, like you mentioned, I'm an engineer by trade, and I do like big juicy problems, and I seem to be always searching for those, and sometimes a little hard, to avoid the shiny object syndrome that many entrepreneurs, including myself, get trapped in. But I don't have the next big project outlined right now, Michael.
Well, I had a college roommate at Ohio State, and he was aeronautical engineer, and I know how hard he worked and how he studied nonstop, and he was just brilliant. So you must be off the charts brilliant. So it's so impressive to talk to you. It's amazing. You got a great story. And the amazing thing to me is with your education and what you did, that there was this burning desire that I'm an entrepreneur. This is what I really am. And that's just a neat story that, you had an incredible path probably carved out for you that you could be doing. And it's just that burning entrepreneurship in you that led you to here. So, Brian, this has been fantastic. Like I said, I would love to shake your hand, meet you, look you in the eye, and hopefully someday I will get to do that. We're not too far away.
Yeah,
if you're in Cleveland, call me. I'll meet you for coffee. I'll meet you for a beer, whatever you want.
Well, sounds good. I definitely appreciate the kind words. It's the entrepreneurship it's a fire that burns, and you can't really put it out. It's a weird one. It's certainly not for everybody, but it
doesn't stop, and you have to let it out. But that had to be like, I'd imagine you had so many sleepless nights when you were doing this. Am I going to do this? And was there, it just felt so right that I got to do it?
I don't know that it ever felt so right that I was more of, I just couldn't avoid it. It just kept itching and itching and itching. And I just had to, eventually try to make the itch go away. I tried to do it as a side gig for many, many years, and before I was recommended by a now mentor and great friend. He's like, you know what, Brian, if this is going to be a real thing, you've got to dive in and do it full time. You can't. It's not getting the attention that you need, and that was a very, very nerve-wracking moment in saying, okay, I'm going to give up a career, right, to do this full time. But it is truly, looking back, the best decision that I made, right. Otherwise, I was kind of failing at both, right, as opposed to succeeding at one. I didn't have enough time in the day to give either the engineering or the business what it needed.
Gotcha. Well, one last question. Why would an investor want to work with you and your group rather than go on it solo?
I used to tell folks, go solo, right? And I highly recommend go solo because there's no reason to give up any sort of profit share, right? Unless you find a ceiling that you just can't get past. Most people find that ceiling is capital. But I hand it to everybody that can get past that ceiling, on their own. Most folks get to that ceiling on their own, right? And then they're coming to us for that assistance to get them to that next level. And that's where, truly we look at it as a partnership. So I'm not telling folks to, work with us instead of trying to go solo. If you've got some capital, you're really highly self-motivated, you can find these deals on your own, right? And then if any of those things become limiters, we want to be your resource and your best friend to get past that, whatever that hurdle ends up being.
I'm sure you know this. The real estate market, at least in Cleveland, is doing great. It's been on a tear for a while. We're a lack of inventory. With things going like that, you're still seeing all these lien investments. It never goes out of style. It's just probably the amount of the value of the houses are probably different. If we were in an economic downturn and went through a recession and people started losing the job, I would imagine there would be a lot more expensive houses going through this. Is that true?
To some degree, right? But again, the more expensive houses, you typically end up in a mortgage foreclosure way before it ever ends up in this scenario, right? And so it is counter-cyclical. You do see an increase in recession. There's an increase in the amount of liens. But the reality is it's just a small fraction of properties that go abandoned for one reason or another that end up in this scenario. That's the type of properties, and there always has been and likely always will be those types of abandoned assets, at least that make it to the tax deed phase. And so, yes, they're still going on in Ohio and every state. Certainly, the volume today is not what it was in 2011 and 12, which was like the peak. Like it's a delay, right? When there was the recession in 08, 09, it takes 3-4 years before you see it on the tax sale side. There certainly was a balloon, right? An increase, and it's dropped since then, but it doesn't disappear by any means.
Enjoy these times. Don't work too hard, man. Enjoy your family.
We'll try. Yeah,
it was great talking to you, man. Great
Likewise.
Talking to you, Brian. Outstanding. I appreciate this so much. Thanks for listening. I hope you enjoyed this conversation. Make sure to follow us on social media at MDV The Blueprint on Instagram, TikTok, and YouTube. We post a ton of great content. And please don't forget to subscribe to our podcast channel so you never miss out on an episode. Thanks again, and see you next time.